I'm Ramanyang. Thank you for joining me this evening. Let's start our journey tonight in Uganda, where a number of businesses say they will cut trade links with South Sudan as others are increasing the prices for goods that they export as a direct result of a growing insecurity in Africa's youngest state. Fighting has been raging for months now between government forces and rebels. South Sudan is a big trading partner for Uganda, but exporters say the ongoing insecurity right across the border is moving many to opt out of South Sudan altogether. Here's Isabel Nakiria with more.
Ugandan grain dealers expect a bumper harvest at the end of this season, but many will not risk exporting their stock to South Sudan because of the insecurity there, and some have been forced to increase prices of their merchandise for fear of losing it along the way.
When there is a war, people will fear to go. The purchasing power also reduces. There's a lot of inconveniences, so which has affected the trade.
Uganda sells mainly food, beverages and construction material to its northern neighbor, earning about $170 million from exports last year. It's expected that exports to South Sudan could drop this year if the war does not end.
South Sudan is a very strategic and important country for Uganda's trade. The only way is the leadership of the two nations, and I think they are now trying to do the best is to resolve these hiccups which are there.
For 2 years, Ugandan traders have demanded millions of dollars from the South Sudan government after exporting tons of grain. Many Ugandan traders were forced out of business because of non-payments. They say the two governments are talking to resolve this and hope their payments are reimbursed. 80% of exports to South Sudan comes from Uganda and demand is continuously high. But if many traders from Uganda stop delivering food, grain exporters say this will put lives of millions of South Sudanese at risk, since many are already going hungry because of the war. Isabel Nakiria, CCTV, Kampala.
Now, over in South Africa, Harmony Gold will temporarily close a loss-making shaft in a move that could affect up to 1,500 jobs. Now, job cuts, as you might be aware, a fairly sensitive issue in South Africa. Close to a quarter of the workforce is unemployed. Labour relations are quite fragile. Harmony says it will take measures to try and minimise or prevent job losses altogether as a result of placing the Target 3 shaft on care and maintenance. Now, that essentially means it will be closed for an indefinite period of time. The company said it considered current and past gold price trends and, of course, future prospects, plus the significant capital investment needed to sustain operations on the Target 3 shaft before making the decision. Harmony expects output of about 1.2 million ounces of gold in the 2015 fiscal year after producing 1.17 million ounces in the preceding one. Let's get some more analysis on this developing story. Heading over to Johannesburg now, CCTV Sumitra Naidu standing by over there. Sumitra, walk us through this. What factors made the Target 3 shaft unprofitable?
Well, Rama, it looks like it was a combination of rising costs, a lower production and a weaker gold price. The Target 3 shaft is very deep. The ore bodies lie at depths of between 2,200 and 2,500 meters below surface, which meant higher production costs. Harmony took over the shaft back in 2004 and has been trying to lower the cost while trying at the same time to lift production. And as the miner said in its statement today, it tried several measures by both management and organised labour to return this shaft back to profitability, and of course it hasn't seen that. In the latest results, Target 3 recovered grade decreased by 7%. The tonnes milled also dropped around 7%. So the problems had been there for a while. In November last year, Harmony reported that 5 of its shafts were recording losses, and analysts say the announcement of the closure is pretty much in line with the miners' long-term strategy to cut costs and streamline the business to improve margins and focus on the more productive mining operations.
Indeed, Sumitra, as you said, cost cutting does seem to be a bit of a mantra for Harmony Gold, but the management says they will try to minimise job losses. Realistically, though, can they afford to keep all of the 1,500 employees on the Target 3 shaft elsewhere within the company?
Well, it does seem pretty hard at this stage, but apart from the loss-making shafts, Harmony is still making headway with all its other operations in other countries as well. It recorded a steep fourth quarter loss because of a 1.4 billion rand write-down on the expansion project that it was doing at its Pakisa operation. Production rose 3% from last year, and the miner has managed to bring down its costs and debt, giving it a bit more financial flexibility. But having said that, the job cuts may help to actually maintain that financial position. But Graham Briggs, the CEO, did say today that they would look at all means of saving jobs, redeployment of mine workers to other operations, and also reskilling of workers. So it's really a wait-and-see approach at this stage.
Indeed, we'll have to leave it there. That's CCTV's Sumitra Naidu live in Johannesburg. Now let's pull back a bit for continental perspective here. By 2040, Africa is projected to have the biggest labour force in the world, and it will be experiencing faster economic growth than any other part of the planet. Now, that's according to a report released by the audit firm PwC. Its analysts argue that large cities across Africa like Lagos, Kinshasa, Dar es Salaam in Tanzania, Nairobi in Kenya and Johannesburg, where we've just been, are poised to drive growth forward. Now, the population of these 10 cities that it studies is projected to almost double by 2030, growing by around 32 million people. Combined output from those 10 metropolis, about $140 billion by 2030. Now, rapid urbanisation, oil and gas finds and the swift uptake of technology are some of the other factors in the region that appeal to the global investment community. The report, however, does note that policymakers must focus on infrastructure developments to bolster sustainable and inclusive growth in future. Let's dig a little deeper into PwC's report. Melanie Ralph joins us now live from London. Melanie, urban per capita incomes across Africa more often than not do grow faster than the national average. So could the argument be made here that PwC's forecasts are pretty conservative?
Yes, that could very well be the case, Rama. The PwC report states that future projections are conservative as they haven't factored in the exchange rate appreciation that could occur. That's just one factor. The underlying message, however, is that there's huge potential that Africa could offer faster economic growth than any other region. The report suggests that with population in certain areas of sub-Saharan Africa expected to more than double, the working population could help to triple economic output by 2030. As top investment areas and largest projection of economic expansion due to population is Lagos in Nigeria, but PwC suggests that the top three of the up-and-coming countries offering the biggest opportunities are Tanzania, Angola and Sudan.
Indeed, PwC also did point out that infrastructure and social services are two of the missing links these cities need to attain their potential. From a different perspective, however, if we flip that argument, aren't those the immediate opportunities for investment in electricity, low-cost medical care and education?
Yes, absolutely, Rama. There is a huge infrastructure deficit in sub-Saharan Africa. Some analysts say up to $1 trillion of deficit. So there's plenty of opportunity for the private sector to step in and start filling the gap. It's not only the hard infrastructure that needs improving, like the roads and trains and rail tracks, but soft infrastructure like education, schools and universities. And it's investment in this that will really spur long-term growth to areas, according to some economists. The other key area that needs to be focused on is energy, of course, where there is huge problems. Once these are tackled via private investment or else, then some analysts see sub-Saharan Africa leapfrogging ahead of a number of economic avenues.
Indeed. Thank you very much for that. That's Melanie Ralph there live in London. Now, as we head into a first break, going off to pay a couple of bills, let's make a quick run through the equity market, see exactly what has happened here. Bit of a mixed bag, quite frankly, across the board. The Nigerian All-Share Index and the EGX30 both heading up, but I'd like to focus on East Africa, specifically BAT at the NSE 20. That hit an all-time high of about 801 shillings a share, up by about 9.28% in trading today. Kenya Airways did plunge below 10 shillings a share in trading on Monday. Today, however, a bit of a recovery, up to about 9 shillings 95 cents per share from Monday's fall. However, most of that is attributable directly to the effect of pulling back from flights in West Africa. When we come back, we'll be exploring the challenges that come with urbanisation and growth in Africa. Kenya's capital, Nairobi, is our focus. We'll see you in a few minutes. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies.
From small businesses to large-scale enterprises, hear directly from entrepreneurs behind the story. It's about putting you in the picture so you know where Africa fits in the global context.
Global Business, weekdays at this time on CCTV Africa.
African leaders have been urged to make it easier to move and do business across borders within the African continent.
Africans should be free to move in their continent, to do business, to interact, if we are to grow the levels of investment and trade that will ensure that we are able to create the jobs for our people that we require.
Now then, urbanization is a bit of a theme tonight, not just on Global Business, even in Africa Live. But let's focus on one specific issue. At the moment, Africa is the least urbanized continent on the planet. But lately, we've seen countries across Africa being home to some of the fastest rates of urbanization worldwide. African urban areas are growing at 3.5% a year. That figure is expected to at the very least hold or accelerate through to 2050. Now that's in stark contrast to other parts of the world where urbanization, for example, is barely 2% in Asia, 0.3% in Europe, 1.23% in Latin America and the Caribbean, and just about 1% in North America. Moreover, the share of the African population that lives in urban areas was about 28% in 1990. That's projected to hit 52% by 2025. And that poses a major challenge for African governments, with countries like Kenya seeing a larger and larger chunk of the urban population living in slums. Now, if the bulk of your population in urban areas is concentrated in slums, it helps to understand exactly what sort of challenges they face, not just from an infrastructure perspective, but from a social and an economic one as well. To help us understand that in a little more detail, let's now talk to Dr. Blessing Burrow. He's the head of the Urbanisation and Wellbeing Programme at the African Population Health and Research Centre and is with me in studio. Thank you for your time this evening, sir.
Thank you for having me.
This survey that you have, fascinating study, it indicates that the proportion of slum dwellers who are concerned about unemployment between the year 2000 and 2012 essentially halved. Why is that?
Well, that's indicator that halved is actually concerns. Okay, people were asked to identify what are their key challenges. Okay, it doesn't actually mean that unemployment has halved.
Indeed, because I mean in that interval,
in fact,
unemployment has gone up.
It has gone up. What has happened is that there are new challenges, okay? And two key new challenges that was not there, in fact, it was not identified in 2000, but now in 2012, is the issue of garbage and sewer disposal, and most importantly, insecurity. So, and you know that when new challenges come on board, it blurs the old challenges. So it appears, and that's what that report shows, that the challenge of insecurity, which has actually become very significant in the slums, particularly of Nairobi, okay, has seemed to have taken prominence relative to unemployment. But in reality, unemployment has actually increased.
But that's an interesting paradox, isn't it? Because you've got unemployment rising across the board. I mean, in case of women, for example, I see women unemployment in this particular survey that you referred to was up to about 50.7%.
It is 50.7%.
By the end of 2012, and yet unemployment is not a concern. How do we reconcile those two elements?
Well, like I said, the issue of concern has a lot to do with what are on the plate. And like I said, when you have new concerns that are more threatening, for example, insecurity, there's a lot of people losing their lives, there's a lot of issues around mugging, issues around shooting.
Issues around gangs.
Yeah, so those things has a way of, blurring or blunting the other challenges. So, and remember, these are questions people were asked to speak out of their mind, okay? But when we really measured unemployment, it was really high, okay? And like you mentioned, for women, unemployment was actually over 51% of them were not employed. And for men, over 16% were not employed, not working at all. And when you even talk about employment, it's also important to underscore the kind of employment that exists there.
Because this is just basically vulnerable.
Yeah, they are unemployment on the fringes that doesn't have security. For example, if you look at the data, only 14% of women who are employed are in formal employment. Okay, and for men, it's actually just 18%. So the rest are informal workers. People who live on the fringe, anything happens, they lose their job, whether they are gardeners, whether they are...
instant inflation goes up, incomes drop, that's it.
So
you're down into the poverty
you are
bracket.
out. So basically, unemployment is a key challenge in this place.
Let's focus on something else that was also in the publication, and this really stood out for me. Women in the 20 to 24 age group have a low labor force participation rate in Kenya. And I'm quoting a line from the report here. As a result of the changes in their marital status. Now, with regard to women in the slum areas, what effect does marital status have on their ability to participate in the labor market?
That's a very good question, and quite an interesting finding as well. From the data, 42% of the women who live in the slums of Nairobi are married by age 24. Okay? For men, it's actually only 14%. Okay, so what does that do? When you get early marriage, actually blocks progression in school. So when young women marry early, their ability to acquire skills that will help them secure employment is actually jeopardized. Yeah. Okay, so that is one. Of course, marriage is the gateway to pregnancy and to childbearing. So early marriage leads to early childbearing.
And the burden of child rearing falls disproportionately on
women. The women, okay? So the time required for childcare and the fact that immediately you have a young kid, you are not able to take opportunities that, I mean, the jobs are not really there, but when they are there, they are not mostly outside the home. Yeah. So and immediately you have a child, it becomes difficult for you to go for such opportunities. Moreover, in the slums, in the context of poverty, it's a luxury to be able to hire childcare, somebody to take care of your child for you to be able to go for such jobs. So those are the factors that come together, which marriage brings, that hinders participation of younger women in the labor force.
One last question to you, Doctor. Some fairly interesting demographic shifts within the data that you put out in the survey as well. The proportion of men between the ages of 15 and 49 decreasing in 2012 compared to the year 2000. What's going on? Why are men living less, for lack of a better word?
Well, again, an interesting finding. What has happened is that in the last 50 years after independence, migration has shifted. Before independence, in many African countries, it was mostly men that moved. But after independence, female migration has actually increased. So that over time, we have seen significant shift in the structure, the gender structure of urban populations, with a lot of young women also joining the migration stream. That's actually the key for explaining what is happening. However, it is important to underscore, I mean, in Kenya, this data didn't cover the real effect of devolution. But we see that devolution is something we were going to look for out in the future that has potential to shift population to the counties beyond Nairobi. What that does is that devolution creates centers of counter-attraction. And of course, migration follows resources. So we are looking forward to devolution moving
and see if it'll actually have a reverse migration.
And most of the time, men move first. So those are some of the factors we are hoping in the future will be able to drive the structure of the urban population.
Indeed, fascinating data, Dr. Burrow, but we'll have to leave it there for the time being. That has been Dr. Blessing Burrow. He's with the African Population and Health Research Center in studio with me today. We'll put a link to this study. It's a fascinating one. If you have time for it, just actually do get out there and read it if you can. Now, quick run through commodity prices here for you. Let's see exactly what's been going on. Crude oil prices, as far as Brent crude is concerned, another day in which it hit a 14-month low. The interesting story, however, is in coffee. Kenyan coffee prices down slightly, down about $7 or so for 50 kilogram bag of top-grade coffee. Brazil, however, is an interesting one here. Serious damage to the crop. We're looking at yields being cut by about 30%, primarily due to absolutely lousy weather. That's a story we'll keep a very close eye on for you here at Global Business. Now, when we come back, we'll be looking at Uganda. Demand for reliable electricity supplies prompting some enterprising individuals to produce power from plant material. All that and more is coming up next. We're about 20 minutes into the hour and you're watching Global Business Africa from the Kenyan capital, Nairobi. Now, increased electricity demand in Uganda is causing widespread power shortages. As part of efforts to try and tackle the problem, Ugandans are now turning to biofuels. Now, one company is using crops to generate power. It's called Pamoja Energy. It uses corn cobs to produce electricity, and that in turn is lighting up villages in central Uganda in the district of Mpigi. Michael Baleke tells us more on this venture on Grassroots Tonight.
Maize is mainly grown for consumption in Uganda. The corn cob is usually thrown away as waste, but now it's being put to use.
We get maize cobs and take it through a process called gasification, where we generate a gas and we put it in an internal combustion engine, your usual generator. As opposed to these other generators that use diesel fuel, for us we use the producer gas, which we generate from the biomass, from the maize cobs.
A pilot project, now in its third year, is powering up 60 households in Tiribogo village in central Uganda. Residents say the electricity being generated has transformed their lives.
I used to go to bed early because of the darkness, but the electricity has extended my working hours. I can now mill my grain, pack my beans for sale, and the chicken in my poultry farm can now feed.
More clients are coming to my bar because of the nice music and the light that makes them stay longer hours in the night.
The renewable plant needs about 200 kilograms of cobs to operate for 6 hours every day, which are provided by local residents.
We had an arrangement with the community to continuously supply us with the maize cobs since they were not paying for the power, so that we can keep the machine running.
More than 80% of Ugandans live in rural areas, but less than 10% have access to electricity. It is hoped that such technologies will increase access to clean and renewable energy. Pamoja Energy is funded in part by the Renewable Energy Incubator set up by Uganda's state-run Makerere University. The incubator helps local companies develop renewable energy projects.
Uganda is really an agricultural country and there's a lot of large quantities of biomass. So the future is really to have more partners and be able to roll out and upscale this project in terms of commercializing it and using it to generate more and more electricity.
The residue from the corn cobs that are burnt for fuel is then used to make briquettes, another form of clean fuel that can be used for cooking. 4 more plants have been set up in different parts of the country to provide electricity where it is needed the most. But costs are steep, about $60,000 per plant, all of which are imported. So plans are underway to manufacture some of the parts locally, which reduce costs and help make their use more widespread. Michael Baleke, CCTV, Mpigi, Central Uganda.
Of the question of power generation, a quick run through the currencies here for you. Our focus is firmly on the South African rand. Inflation data is coming out sometime tomorrow. The bet among traders in the market is that it will go up, and that in turn will ratchet up the pressure on the South African Reserve Bank to keep raising rates in order to keep pace with that. As you might recall, they did raise the base lending rate by about 25 basis points to 5.75%, the repo rate rather, to 5.75% in June. Whether or not that will give support to the rand, something we'll have to see once the data comes out tomorrow. Now, just before we go, on Global Business tomorrow, we'll be in South Africa once again. The rapidly growing mobile payment sector showing absolutely no signs of abating in its growth. There's a new player who might be increasing competition in the market. FlickPay is a new app that allows both users and merchants to be jointly integrated into the sale by incorporating it into the POS system. That's really fairly interesting to see. And in Nigeria, the country may be battling security challenges, but its economy isn't doing too badly. In the first quarter of 2014, real GDP growth was up 6.2%. This economy has created quite a few opportunities for new startups and is keeping young CEOs on their toes. We'll find out what's driving them right here on Global Business tomorrow. That's it for this edition of the program. Send your feedback to Global Business Africa at cctv.com. You can visit our Facebook page as well, wherever you are online. Facebook, Twitter, you name it, we're there. The news continues 24/7. I'll see you over there. I'm Ramanyang. Thank you for watching.